Welcome back again. We will discuss today about the nature and scope of financial management. Financial management. Financial management. Under this chapter, under this paper, under this subject, we have to discuss about the basics of financial management, means nature and the scope of financial management. Nature and scope of financial management. Under nature and scope of financial management, first and foremost, we should know about what are the nature of financial management. It means, what do you mean by financial management? What is financial management? Financial management is financial management is concerned with efficient acquisition and allocation of funds with an objective to make profit for owners. Financial management is concerned with efficient acquisition. Acquisition implies that financing activities. Acquisition implies that financing activities. Acquisition implies that financial activity. Acquisition of funds and allocation of funds implies that investing activities. As we know, we can classify the investing activities into two parts. First is the capital budgeting decision and second is the working capital decision. Allocation implies that investing activities, acquisition implies that financing activities. Financial management is concerned with efficient acquisition and allocation of funds with an objective to make profit for owners. Profit implies that dividend decision, means dividend distribution or distribution of dividend decision. When we distribute dividend, what are the situation? To distribute dividend, it is under the dividend decision. On the basis of this definition, we find three things here. First is the financing decision, second is the investing decision, and third is the dividend decision. Financing decision implies that where to get money from. Investing decision, investing activities or investing decisions imply that where we have to use the money. And dividend distribution, dividend decision implies that how much dividend should be distributed among the shareholder. On the basis of this definition, we can say that financial management is concerned with planning and controlling the financial resources of the firm. It is concerned with acquiring, financing, and managing assets to accomplish the overall goal of the business enterprises. Now, we have to discuss about the aspects of financial management. There are various aspects of financial management. Aspects of financial management is: first, on the basis of the definition, procurement of fund, procurement of fund and utilization of fund is the second aspect of the financial management. Utilization implies that efficient utilization of fund. First is the procurement of fund and second is the efficient utilization, optimum utilization of fund. When we talk about the procurement of fund, there are so many sources of fund. Under procurement of fund, we can say that various sources of fund. Various sources of fund means source from equity, owner's capital, source from preference capital, you can say. Sources of fund from debenture, bank loan, venture capital, angel financing. These all are the various sources of fund, and on the basis of these sources we would be able to procure the sufficient fund. This is the sources of fund or procurement of fund, you can say. We procure the fund, we think about some points: risk, cost of capital and control is the major issue under the procurement of fund. When we procure the fund, when we find out the various sources of fund, we consider about the risk involved in that fund, we consider about the cost of capital involved in that fund, and also we consider about the control due to these sources of funds. Control implies that there are two sources of capital. First is the internal source of capital and second is the external source of capital. Under internal sources of capital, control is in the hand of owner, but under the external sources of capital, control is in the hand of outsiders. And therefore, when we procure the fund, we think three things. First is risk, second is the cost of capital, and third is control. When we talk about utilization of fund, utilization implies that under financial management, effective utilization. Under financial management, utilization implies that effective utilization, optimum utilization, and our optimum utilization of fund may be the investing activities. And we can classify the investing activities into two parts: long-term investment and short-term investment. Long-term implies that investment in capital expenditure, investment in fixed assets, that is also known as capital budgeting decision, and short-term investment implies that investment in working capital, utilization in working capital, utilization in long-term assets or fixed assets, or utilization in working capital or short-term assets. We can utilize our fund into two ways. Now, finance function. When we talk about the finance function, then we can say that finance function implies that the value of the firm is, there is a functional relation between financing decision, investing decision, and dividend decision. Value of the firm depends upon the investing decision, financing decision, and dividend decision, and therefore we can say that there is a functional relation between investing decision, financing decision, and dividend decision with the value of the firm. Value of the firm implies that B, value of the firm. F implies that functional relation. I means investing activities or investment, you can say. F implies that financing activities, and D, dividend. That means the functions of finance can also be divided into long-term functions as well as short-term functions. Long-term finance functions imply that investing decisions, financing decisions, and dividend decisions, and short-term finance functions imply that working capital decisions only. Now, what are the various importance of financial management? It is the duty of the financial management taking care not to over-invest in fixed assets. It is the duty of financial management that to minimize the cost of capital, to maintain the balance between external source of fund and internal source of fund. It is also importance of the financial management to evaluate the risk involved in that source of fund. It is also the importance of financial management to take the right decision when the business is going to invest in long-term assets, fixed assets. That means capital budgeting decisions. It is also the importance of the financial management to take into account towards the short-term needs of the fund. Because if too much funds are employed for short term, excess funds are employed in short term, it is harmful for the business. And if there is a shortage of liquidity, there is shortage of fund for short term, it is also harmful for the business. And so the business should maintain the balance, optimum balance under the short term funds requirement, under the working capital requirements. One of the importance of the financial management to maximize the value of the shareholders. One of the importance of financial management is also that to minimize the tax liabilities by proper tax planning. When we discuss about the scope of financial management, what are the various scopes of under the financial management? What are the various scopes under the financial management? A scope of financial management. There are various scopes of financial management nowadays, as I have already explained. First is the determination of the size of the organization and determination of the rate of growth. It is the scope of financial management. Determination of composition of assets in the organization. Assets means for long term assets and as well as short term assets. Long term and short term assets. How much assets are involved as long term and how much assets are involved for short term. It is determined by the financial management. Under the financial management, we would be able to determine that how much assets, how much fixed assets should be involved in the business and how much short term assets should be involved, current assets should be involved in the business. Financial management also explains that how much external source of funds should be and how much internal source of funds should be on the basis of cost of capital and risk involved under that fund. That means it also explains about the capital structure decision, how much capital, what should be the capital structure for the company, what should be the capital structure of the company. It is explained by the financial management, and so it is one of the scope of financial management. Financial affairs of the enterprises are analyzed, planned and controlled under the financial management, and so that the right decision would be taken at the right time by the finance manager, and also the business would be able to maximize the wealth of the shareholder. That means we can say that overall goal of the enterprises is only to maximize the wealth of the shareholder, and it is the financial management which helps the organization to maximize the wealth of the shareholder by enter, by analyzing, planning and controlling of financial affairs of the enterprises. This is the nature and scope of financial management. In next class, we will discuss about the organization of finance and other various topics. And also, I am going to say you that we will discuss the practical problem under the financial management paper also, especially in capital costing, under capital structure, under dividend decisions. We will discuss various practical problems, and therefore watch regularly my video and also share this video to those who are more needy students so that they would be able to benefit from my side. Thank you.